Welcome back. Jerome Powell, the chair of the U.S. Fed, said yesterday the Fed is in no rush to make further rate cuts given the current state of the U.S. economy. This morning, we got new October retail sales numbers, which indicated American consumers are still spending. Let's bring in Skyler Weinand, Chief Investment Officer at Regan Capital. He joins us from Dallas, Texas this morning, and that is where Jerome Powell spoke yesterday. Skyler, thanks a lot for speaking with us. What's your view on how much farther the Fed has to go in this rate cutting cycle? The market at one point was looking at as many as 8 rate cuts.
Yeah, I don't want to say they're done, but they're not that far. I think they'll cut here in December and then maybe wait. I think January is a 50-50 chance on whether they're going to cut there. And so over the next 13, 14 months, by the end of next year, we may only see 2, maybe 3 Fed cuts, bringing the Fed funds rate down to about 4%. And in the meantime, the back end of the curve might be selling off. We might see 5% again on the long end of the curve, and that's actually really welcome news. We want a steep rate curve. We want a term premium. We haven't seen a real term premium in a while. So I would love to see the Fed only cut 50 to 75 bips and the back end of the curve actually sell off.
The steepening yield curve is also a forecast by the bond market that inflation will be higher in the future than it is now. How real is the possibility of a pickup in U.S. inflation?
Look, the U.S. consumers and U.S. corporations are extremely strong. Corporate balance sheets, corporates are seeing the least amount of leverage since 1950. Okay, so debt to equity in the United States is only at about 19%. Consumer balance sheets are extremely strong. So consumer debt, including mortgage debt, has been about the same for the last 5 years, yet U.S. net wealth has grown to about $165 trillion. Okay, so consumers are very strong. There's a lot of runway for consumers to continue to spend and potentially re-lever. Add to that, the government's going to spend $2 trillion next year in a fiscal deficit. Okay, so there are so many wheels behind inflation potentially rejiggering up above 2.5%, 3% where we are right now. I'm not saying we're going to go to 5 or 6, but inflation and fears of inflation are real. It
was very common to hear people in your world say before the election that either candidate, Donald Trump or Kamala Harris, would likely have an inflationary effect with stimulative spending, with their fiscal policies. Now that we know it's going to be Donald Trump, is a Trump administration going to be inflationary?
Well, what's amazing is that it was only 2 months ago, September 18th, when the Fed cut 50 basis points, and the market was saying, hey, rates are going to come down, inflation doesn't exist, and it's insane. Everybody knew only 2 months ago that either Harris or Trump were going to get elected. Okay, now that Trump's elected, is he going to be more inflationary potentially than Harris? Probably. Okay, I don't think taxes are going to go up. Okay, so I don't think government revenue is going to increase that much. And potentially he's going to spend a lot more than what Harris was going to spend. So that said, we live in a debt-based economy. Yes, fiscal deficits are almost $2 trillion. Yes, federal debt's going up, but it's actually been a really good investment if you look at corporate and consumer balance sheets. If you look at the wealth that's been created since 2020, we're talking about $50 trillion in wealth creation relative to the $7 or $8 trillion that the government spent. Sounds like a great investment to me.
You believe that discount retailers will do well in an environment marked by stubborn inflation. TJ Maxx is one stock you highlight.
Yeah, whereas the aggregate economy is doing great, it's very bifurcated. Okay, so you have asset owners, equity owners, and real estate owners that have done tremendously well. That's where most of the wealth creation has come. But if inflation persists and potentially increase, there's the other side of the economy that are skimping okay, that aren't able to afford to go to Neiman Marcus or Saks or Macy's anymore, they're going to TJ Maxx or they're going to Ross stores. Okay. So those retailers will continue to do well. They've done extremely well for the last 10 years or so. But it's bifurcated. You have luxury goods, and then you have folks that have to trade down from a Whole Foods to an Aldi, from a Macy's to a TJ Maxx. And so I think that bifurcation of the economy persists, unfortunately.